On Sunday, currency markets across Iraq closed with a noticeable shift that caught the attention of traders, analysts, and everyday citizens alike. The US dollar declined against the Iraqi Dinar by the end of the trading session, settling near 154,600 dinars per $100. This movement, while seemingly modest on the surface, reflects deeper dynamics within Iraq's foreign exchange market and offers insight into the ongoing efforts of monetary authorities to stabilize the national currency. According to a market survey conducted by Shafaq News, the dollar was traded on Baghdad's Al-Kifah and Al-Harithiya central exchanges at 150,600 dinars per $100. Earlier in the day, the rate had stood significantly higher at 157,000 dinars per $100. The drop of 2,400 dinars within a single trading day illustrates the volatility that can emerge in Iraq's currency markets, particularly in a system where demand for US dollars remains structurally strong due to imports, cross-border trade, and public preference for holding foreign currency as a store of value. In Baghdad, the capital city and economic hub of the country, exchange shops reported slightly different retail rates compared to the central exchanges. The dollar was selling for 155,000 dinars per $100 and buying for 154,000 dinars per $100. This spread between buying and selling prices represents the margin that exchange shops rely on for profitability, while also reflecting immediate market supply and demand conditions. Even a difference of 1,000 dinars per $100 can influence daily trading behavior, especially for small business owners and individuals who routinely exchange currency for commercial or personal needs. Meanwhile, in Erbil, the capital of the Kurdistan region, the currency followed a similar downward path. The selling price reached 154,050 dinars per $100, while the buying price stood at 154,000 dinars per $100. The alignment between Erbil and Baghdad rates suggests that currency flows between federal Iraq and the Kurdistan region remain closely interconnected. Although regional economic factors sometimes create minor discrepancies, the overall movement tends to track the broader national trend influenced by central bank policies and dollar supply mechanisms. The significance of the dollar's decline on Sunday cannot be understood without considering the structure of Iraq's foreign exchange system. Iraq operates a managed exchange rate regime, with the Central Bank of Iraq playing a central role in supplying US dollars to the market through official channels. These include currency auctions and electronic platforms that facilitate transactions for banks and licensed exchange companies. The aim is to meet legitimate demand for imports and external obligations while preventing excessive speculation or illicit outflows. When the dollar rate drops from 157,000 dinars to 154,600 dinars per $100 within hours, it often indicates that supply conditions improved during the session. This may result from higher dollar injections by authorities, reduced speculative demand, or corrective trading by market participants who perceive the earlier rate as inflated. Traders who purchase dollars at elevated prices may choose to sell once the market signals a downward correction, accelerating the decline. For the average Iraqi citizen, fluctuations in the dollar-to-dinar rate have real and tangible consequences. Iraq's economy relies heavily on imports for food, consumer goods, electronics, machinery, and medical supplies. Because most international trade is conducted in US dollars, any increase in the dollar's local value can translate into higher prices for imported goods. Conversely, when the dollar weakens against the dinar, it may ease pressure on retail prices, although the transmission is not always immediate or proportional. Businesses that depend on imported raw materials monitor exchange rates closely. A manufacturer purchasing goods in dollars benefits when the dinar strengthens, as it reduces input costs in local currency terms. Similarly, retailers can manage their inventory costs more effectively if exchange rates remain stable or trend downward. However, Volatility introduces uncertainty, making pricing decisions more complex. The difference between the central exchange rate and retail exchange shop rates is another critical element in understanding the market. Central exchanges such as Al-Kifah and Al-Harithiya serve as benchmark venues where large volumes are traded among banks and major dealers. Retail shops, on the other hand, operate at street level, responding directly to customer demand. Their slightly higher selling rate of 155,000 dinars per $100 reflects transaction costs, operational expenses, and risk management considerations. In Erbil, the marginal difference between selling and buying prices, just 50 dinars per $100, signals competitive conditions among exchange houses. When spreads narrow, it often indicates sufficient liquidity and reduced panic buying. Wider spreads can suggest uncertainty or concerns about future supply. The psychological dimension of currency trading should not be underestimated. In Iraq, as in many emerging markets, public perception can influence demand patterns. If people anticipate that the dollar will rise, they may rush to purchase foreign currency, driving up the rate further. Conversely, when news circulates about a decline or increased dollar supply, holders may sell to secure profits or avoid losses, reinforcing downward movement. Sunday's decline from 157,000 to 154,600 dinars per $100 may therefore reflect both institutional measures and behavioral adjustments. Market participants react quickly to signals regarding central bank interventions, regulatory enforcement, and geopolitical developments. Iraq's monetary authorities have repeatedly emphasized their commitment to stabilizing the dinar and ensuring transparency in dollar transactions, particularly to comply with international banking standards. Global factors also play a role. Although Iraq's exchange rate is managed domestically, broader movements in the US dollar worldwide can indirectly influence sentiment. When the dollar strengthens globally due to interest rate expectations or economic data from the United States, demand for dollars may increase in many countries. Conversely, when global conditions ease, local pressures can diminish. Oil revenues remain the backbone of Iraq's dollar supply. Since oil exports are priced in US dollars, the government's revenue stream provides the primary source of foreign currency entering the economy. Stable or rising oil prices can enhance dollar liquidity, allowing authorities to meet market demand more comfortably. In contrast, disruptions in oil markets can tighten supply and elevate exchange rates. The intraday shift observed on Sunday demonstrates how quickly equilibrium can change. Early trading at 157,000 dinars per $100 may have reflected initial scarcity or heightened demand. As the session progressed, adjustments in supply or sentiment likely pushed the rate downward to 154,600 dinars. Such movements underscore the importance of continuous monitoring by policymakers. For households receiving remittances from abroad, exchange rate fluctuations affect the value of incoming funds. A weaker dollar means recipients obtain fewer dinars per remitted amount, while a stronger dollar increases their purchasing power locally. The Sunday decline would slightly reduce the dinar value of dollar-denominated transfers compared to earlier rates in the day. Government budgeting is also indirectly influenced by currency trends, although official exchange rates for public accounting differ from parallel market rates. Sustained divergence can create distortions. Authorities aim to narrow gaps between official and market rates to enhance confidence and discourage unofficial trading. In both Baghdad and Erbil, the close alignment of rates suggests coordinated market behavior. The selling price of 154,50 dinars per $100 in Erbil, compared with 155,000 dinars in Baghdad exchange shops, reflects only minor regional variation. The buying price of 154,000 dinars per $100 in both cities indicates that dealers share similar expectations regarding fair value. Stability in currency markets contributes to broader economic confidence. Investors, whether domestic or foreign, Consider exchange rate risk when making decisions. Sudden or persistent depreciation can deter investment by increasing uncertainty about future returns. Conversely, evidence that the dinar can strengthen, even temporarily, may encourage more optimistic outlooks. It is important to recognize that a single day's movement does not define a long-term trend. Currency markets are influenced by structural factors, including trade balances, fiscal policy, monetary management, and political developments. Nevertheless, daily shifts provide insight into immediate pressures and responses. The decline observed on Sunday may offer temporary relief to consumers concerned about rising costs. If sustained over multiple sessions, a stronger dinar could contribute to moderating inflationary pressures. However, the extent of impact depends on how businesses adjust pricing and whether the trend persists. Traders often analyze support and resistance levels in the market. The earlier level of 157,000 dinars per $100 might be viewed as a resistance point that failed to hold, prompting selling activity. The closing level of 154,600 dinars could become a reference for future sessions, with participants watching to see whether it stabilizes or breaks further downward. In practical terms, the difference between 157,000 and 154,600 dinars per $100 represents a 2,400 dinar change. For larger transactions involving thousands of dollars, this difference becomes significant. Importers dealing.